Good afternoon, everyone. Welcome, party people. It is Wednesday, May 6, 2026. Trading Trends with John Salama, CMT here. Let's get right into it. All-time highs, zooming. Let's get right into it. There's a lot going on. I was at the Hashtag Awards on Monday night. That was great stuff. It's cool. There was a investor relations, a Palantir, and Open Door, and it was at New York Stock Exchange. It was really great stuff. Let me go to the trading trends here. A lot has happened. The portfolio moves first. So right here, I will say, so we're out of the oil trade, obviously, as you can tell. We got stopped out of that. Thought it was looking good. Broke down A-OK. We've been buying more. So the biggest positions are Taiwan, EWT. Bought more South Korea today on the all-time highs. I maxed out on SMH and bought more rare earth metals, REMX today. That is a portfolio. I will let you know of the next moves, but almost equal weight, like a third or a quarter each, basically, of Taiwan, South Korea, and semis is how I've been playing this, and a little bit of rare earth metals for the position. Let me see here. If you are on here, we'll have a cap of the day so far through the halftime sesh. Here we go. So this morning, it looks like Iran and the US are working on something like a one-pager to end the war. Markets, of course, have ripped. We'll take a look at all the important charts of the day, the past week. China, the biggest winners today. China, semis, and gold miners. My goodness, zooming higher. We'll take a look at how much for each. And then energy, oil, the complex, volatility. Okay, we're entering that tranquility phase again. New all-time highs for. I got to take a deep breath for this. Qs, emerging markets, broad rally, not narrow. When you get emerging markets and Qs, SPY, IWM, hello, South Korea, semis, equal weight stocks, RSP. So basically everyone's 401k is the highest it's ever been in human history right here, May 6, 2026. SOXX, semiconductors, that's the one that's not super heavy in NVIDIA. SMH is the one that is heavier weighted NVIDIA. XLK, tech, and EWT. As I said, turtles buy the breakouts in the assumption that they continue to go higher. As I told you, my major holdings in portfolio are voila, and voila. And that's how you know you're doing something right. All right, before we get into the specific recap of the day, let's go to the all-important dashboard panel. I hope you're doing great with these markets. I'll tell you, trading is very interesting. When the war happened, of course, the portfolio had a draw. Of course, we were crushing it up as much as 40% on the year and then dropped to about flat. And it was really difficult. And now we're back up to about half of that. So I'm up 20% year to date again. And I think the high watermark is in sight. So it's very exciting. Let us get to the charts here. So Micron, my goodness, up 2% today. AMD, what's going on in the semis is absolutely insane. I think AMD beat guidance or updated their guidance by about $700 million. And they added like billions of market cap. So there's asymmetric reward being given here in the semi space, not software specifically. I'm talking semis. I'm talking about the demand that is being needed indefinitely to the whole AI hyperscaler and everything else that's been going on. NVIDIA up 450. That, like I said before, we're waiting for that so long to break and hold 190. Now look at this new floor resting at 200, 205 here. Q's just a monster day up 1.6. Of course, they're going to be the broadest or biggest beneficiary of a move like this. Intel up 3%. Don't short the government when they buy a stake. My goodness. Meta up 1.5%. Tesla up 2%. Google up 2.5%, largest or most valuable company in the world with all the levers that they have of YouTube, Cloud, Gemini. They're just rolling. SMH up 4%. Good to see my baby up there. Taiwan Semi up 5%. There's a major holding of EWT, so it's two ways to play it. One across the world here, one here at home with the SMH. And Qualcomm up 4%. Broadcom doing the dance the other way, down 1%. So here is the intraday tape. So this was the headline, I believe, right here around 4:30 a.m. It took SPY from 726 immediately to about 729 on that the war ending potentially. That was interesting. As soon as the morning kind of began here. Here is the opening bell at 9:30. Got right back to VWAP. I would say like the excitement of the news had sort of faded, I'll say, from 7 to 9 a.m. Eastern time. And then as soon as the liquidity came in at 9:30 a.m. opening bell, they took this all the way up to 11 a.m. all-time high, 732 half in SPY, holding VWAP here with a nice tag 2 times at 12:30 p.m. and 1 p.m. That magic number on the daily VWAP is 730.60, holding it. We're above that by exactly $1 here. Things look great. We're very possibly going to head to 733, 734 by end of day, which of course be new all-time highs. That's the intraday borderline noise. Let's zoom out here and let's go to the 1-year view of this amazing chart they call the S&P 500. Boy, I just haven't been on since last week. So was the bear market correction. I don't care what you want to call it. We had called it out. The war had started right here. Okay, March 3rd, and when we came in that Monday, I think we invaded and everything right there at the end of February, March 2nd here, gap down, so on and so forth. This is when things got scary. If you go look at my tape literally from March 19th, the videos, that's when I said, you know what, now we're entering a scary situation. Yes, the 200-day moving average of SPY is still rising, but I am definitely fearful, and I will stop being fearful when we get back above the 200-day moving average. And that happened right here when Trump announced that amazing ceasefire on April 8th. So many things happened there. We got above a rising 200-day moving average, also was above a 50 RSI, and that's when the tech was absolutely crushing its that 3-week winning streak in a row. So a lot of things happen here right there at that point. Now, this was a very contentious area that the S&P has been dealing with, SPY specifically, around the 700 level in terms of price discovery, going back from all of 2026. I'm going back from mid-January, if you recall. When we had the whole Venezuela capture news back in the beginning of January. Now that old 700, just like we're saying the NVIDIA equivalent level, 190, old resistance becomes new support. Similar to S&P, I don't think we're bucking and going below 700 anytime soon. For me, and this is crazy, that's why I'm very excited about buying these breakouts. Should the market take a breather and digest these gains to about the 706 level, yeah, honestly, it should. We probably should have a 3% pullback, but I like these candles here. Today, they're proving to me they're still ready to buy more of this market. If this war ends, it's crazy. You're going to see momentum absolutely swoosh higher. I do think, I'd said all along, 740 for end of summer, like a Labor Day target. I'm probably going to push it up here a little bit to 750 for Labor Day. Look at this RSI as well. Not only did we break above, the last thing on this, above the 200 moving average on April 8th, note that 8 days later, we've been overbought and we've stayed overbought for 3 weeks. So there is a line here and folks saying, oh, wait, Google's the most valuable company? Yeah, I'll buy some more mega cap. I'll buy IWM. I'll buy RSP. I'll buy Japan. I'll buy Korea. I buy Taiwan. There's a lot of levers working here, and it's different exposure due to a lot of different connections of what it means, exposure to energy, which folks don't want right now, more tech, more frontier markets. So there's a lot of things to buy. I'm sick of, when I see posts, it's like, oh, everything's all-time highs. What do I buy now? Yeah, you buy the all-time high list, or you could be a dope and buy the 52-week low list and buy stuff that's not in vogue for a while. But I typically don't do that. And you get rewarded when you actually buy things higher, buy high, sell higher. So anyways, while I'm looking from this chart here, lets me know we're probably going a little bit higher. Look at the upper Bollinger Band here is 735. So in terms of risk reward, maybe 0.5% higher, 1% higher in the short term, but I want to be on that side. If you want to chase this right here, playing the ATR game, it's 7.49. So call it 7.5. 2x of that is $15. You can get in right here at 732. I'm rounding here on SPY. Take away, $15. That gets you to 717. If you get out 717, get out, because it's very likely going to 706, and then you re-enter when we have a nicer, cleaner reset, consolidating and digesting those gains. But other than this, market looks absolutely stupendous. I kind of would want a little bit of a drawdown or a correction to 703. But the market looks absolutely on fire. Let's see what's powering it today. And that's really it. And last thing in terms of the chart, just do the candles formation. I think, like I also often say, the market has to correct sometimes in terms of time instead of price. To me, this market has to appreciate in terms of time versus price. And what that means is kind of like what this is here, this stair step higher. I think we're going to have this floor here put out. Worst case is 703, although I wouldn't be shocked if it's 715 due to the animal spirits here in this market. And that would correspond something with like a 60 RSI, a bit of a reset right around 707, probably worst case, and then go higher. Maybe something falls apart geopolitically and Iran says, wait, we're way far away. We're going to reject these ceasefire terms or whatever, blah, blah, blah. And then you'd get that 2.5% down move in tech and whatnot. So that's what I'm looking for. But market looks absolutely amazing. Again, they're hitting... We're 50 cents off from new all-time highs as we speak, 74 RSI. Things look wonderful. Let us get into what are they absolutely crushing today to the upside, China. So if you saw the headline this morning and you're looking at the biggest mover, not in absolute terms. We also always look at sigma moves, which catches institutions off sides. And that's FXI today up 2.3%. This is, a bit of a bottom feeder here. This has been, again, fell under the 200-day moving average February 5th. That's 1 month before the war started. So, sniffing things out way before that. And again, China peaked October 2nd. This is 3 weeks before the previous NASDAQ high. So this is when Bitcoin was 120K. This seems like ages ago of October 2025 at $42. And now this has a wall of resistance at 38.65. It is actually, is it going down now? The 200-day moving average is going down, albeit slightly, about half a penny a day. So that is immense resistance here. This stock, FXI, has not been ready for $38, like in any kind of convincing fashion, since mid-February. For this, though, I do think this has a good 2-3 weeks to go. I think folks are going to get really pretty bulled up in different areas because of the war potentially ending. Hopefully it doesn't last till September, as some people have thought, and not the 2-3 days that Trump has also said a couple of weeks or months ago now. But this looks like FXI, to me, looks like it does want to head to about 38 even. I do believe in that resistance at 38.65. So fair window here. Couple trades. You could probably buy. Be careful with this. See if the juice is, worth the squeeze. Today's May 6th. I like selling. I mean, be careful. We're in a global bull market here. I read the tickers at the beginning. So I want to be careful about selling any kind of calls, but I don't love China. If you need kind of exposure, any kind of a short on your book because you're just too bulled up. I don't know. China, I believe in that wall of resistance there. I like selling the 39 calls, maybe by the 40 against it. If things go insane, they have amazing import, export data, et cetera, et cetera. You want to always be careful with gap risk, especially when deploying a system. And again, don't forget, China hit 52-week lows very recently here. March 27th. This just came off a 52-week low. So pretty crazy to see. So we'll see. It is above 50 RSI, though, for a month now. That's interesting. I just think it's going to hit this 39 wall here. I don't think you're going to get paid on this, but you could probably sell the 36 puts, see if there's vol in it. You can also sell the puts and sell the calls, and therein lies you're selling volatility on it. A couple of things that are there, but I have to check, really go into the option chain and see if implied is over realized to see if it's worth the juice is worth the squeeze, as I said. But that is FXI. I do think it has a good 2 weeks, probably zigs and zags here, and ends up under that 38.65 ceiling. But they're loving it today, up 2.3%. Next, my baby, all-time highs, the semiconductor ETF. We need these chips, and I'm not talking about Lay's potato chips, although it's lunchtime. I could use some of those too. 4% for SMH, just a ridiculous chart. This thing has been green every day of since March 31st, minus 4 days. So that's insane. I'll say that again. This has been green every single day since March 31st, except 4 days. And this is just a, whatever you want to call it, Michael Jordan, Taylor Swift-like run. Since April 14th, for the past 3 weeks, we've been above 70 RSI, today hitting 82. So this is a super long line. This is like, you're going to meet Taylor Swift play a basement in your garage. There's going to be a long line for that, and that's the line for semis. Look at this top capture of the top Bollinger Band, and they're taking it to high of day right here. So it's holding view up on the day, which is 541. High of day is 546. There is an unending appetite for semis right now. I always say we invest in the future. The future is technology. The best way to get exposure to that almost always is SMH. Qs are a little bit more broad, of course, to capture that. But SMH is the juice of it. It is the best returning ETF, I believe, or top 3, probably top 2, actually, over the past year. Don't ignore this trend. You'd be a fool. So that is SMH. Is it getting a little nosebleed territory? Yeah, but you could have said that 2 weeks ago. I'm not going to say I'm going to welcome pullbacks to 475 or to 480 because I'm long this very much in different ways. EWT, South Korea through their AI memory. So this is all, and so very, very closely knit together. But I wouldn't be shocked. The chart's telling me wouldn't be shocked if this pulls back to 480. It's just absolutely crazy. And yes, that would probably scare people. That is a ridiculous move of, what is that, $65 or 12%. Folks would say, oh my God, but it was just catching a breather. So be on the lookout. And that's why you always move your trailing stops higher so you don't kiss away profits. They're yours. You should keep them. And number 2, I've been saying, the gold trade, the metals trade will pick up one day. Look at this chart here. So this is the gold miners, GDX up almost 7% today. So a massive move again. Also, the oil's down massively, right? So these guys just had a massive expense decrease today. So hence why these guys are crushing it versus just straight up gold. It's different return. So think about it like that. March 2nd, the day of the war, essentially, or right that week when it happened, this group peaked at $117, call it. Nice chart, to be honest. Look, rising 200-day moving average. I don't love the what's technically putting in higher lows here. I don't like that the wall was a little bit falling here, but it did hold $80. It's getting a critical interest right here at this 49 RSI. I do believe my screen just went blah, 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 so hang on. I like GDX here, but here's the thing. I think it's decent pickup here at $91. To me, this looks like this is headed to about $101. I do not have the position on just yet. I will be looking out for 1 or 3 month breakouts, which is the rules of the turtle system, and then I will incorporate. This is an interesting point, and the candle today getting myopic here is VWAP is 91.30. It's above that. The high of day is 93. They shed it off that a little bit. I need to see what it does at the 50 RSI, and that is really going to be right around this 90. Honestly, this 93 half mark. So I'd rather buy into strength, get a close above $92, and then you can then you can have more conviction that it gets that 102 target. And then the only other thing there is, see this doji here, the gravestone doji on April 17th that showed me then it wasn't ready for 102. I don't think the situation's changed all that much. I think after that moment, it said, you know what, we're not going to send you all the way down to 80. We'll send it down to 85 just to get back to that 102. So that makes sense. So I do see a recovery here for gold miners. I think it'll get back to that prior resistance point and then go lower. So more of a tactical trade, I think like 2-ish weeks. But it's at a critical point here. I want to see what happens when it gives up or goes above 50 RSI. It hasn't done it in about 2.5 weeks, which capped that run here. Okay. So that's gold miners up nearly 7% today. So that's what they're loving today. If you have exposures to China, semis, I do, and gold miners, congrats, you're absolutely slaying today. Where are the losers? And you can't always be on the right side. I have some losers here today too. The biggest loser, it belongs to a whole sector. It's energy. Of course, war ending means oil go down. Happy days are here again, kind of a thing. A big move for XLE here, down 4.25%. It's pretty massive, as you can see that candle here. So here is the XLE chart. Again, don't forget, we peaked on March 30th, about a full month into the war. Look at the crazy RSI. They loved energy for about a month before the war. And I'm just looking here and about a month into it, and that's when it peaked. Okay, so that's just dates. Energy, I said before, oil would look good, and it did have a bit of a run. Honestly, US, I think got to, crude went, into the 140s, and even with all the talk of the ceasefire, you could tell the market was calling BS on it, and now things are changing. Actually, a big candle here. We are under 50 RSI here at 46, call it. I do not love XLE here. I think this goes lower in the next 2 weeks. I do think the market gets overall globally a little bit more bulled up. I think XLE should go lower. It's a little bit surprising how quickly it went under 58, though it's not. We'll get to oil next about why. But this looks like it is headed lower to about over the next 2-ish to maybe 3 weeks, not in a straight line. The things rarely are. This looks like it wants to drop to about $54. Same way as we said before, it wasn't ready in the previous chart about gold miners ready for that prime time. Look at this right here on April 17th. It wasn't ready to plunge all the way to 53.5, and it went all the way higher from there, and that coincides with the February highs, again, a month before the war started. So I do think this has a rough 2 weeks, the energy complex. I think they sell it down to about a 54 even handle here. So another $3 reduction or another 4% lower from here. Do you buy puts? If you absolutely must, I guess you could possibly buy August puts. When the war officially ends, you're probably going to see this, although markets could be perverse and you think one thing and then it trades the other way. But if and when the market, the war ends, I'm expecting to see this drop to a 200-day moving average. You heard it here first. When it definitively ends, not it's all about the he says, she says, bull. But Biscuit, shout out. Did it all for the Nikki. But that's what I'm expecting here. So trades, if you want, I'm sure they're going to be juiced up very high, but you could do the August 54 puts and then buy something against it or sell something against it. So, like the May 53, something like that. So you subsidize and get paid. But be careful. There's obviously headline risk with this stuff all the time. The XLE, I think it's in the doghouse. I pay attention to signals and me getting out of the oil complex. DBO and OIH lets me know that this is not the place to be. It's much more risk on anything with the chips family. Okay, that's number one. I won't kick a dead horse on this because they're very correlated. Oil down even more than the energy complex, down 7%, is USO. Ugly, and this is exactly what I meant about oil looking good. Let me check my notes of when I recommended it. So we had said April 22nd. So this was a very telling candle here on the 17th. April 22nd, I liked it. USO, I said we can look for a target of 145. Okay. View up on the 22nd was 129. Guess what? Market often goes higher than you think or lower than you think. That's just the way it does. Fat person on the trampoline example. You can't exactly project exactly when they're going to sink and when they're going to rise up. Usually gives and takes. April 29th, the high actually was accomplished at 151.63. Okay, and then now here we are. Look at the candle today, though. Okay, view up on the day. Always pay attention to this stuff. View up on the day, 133.07. It's holding that. The low of the day, they actually sank this all the way to 126, and they said, no, buy them. And the high was 139. So let's see where this closes. Don't forget, USO still over a 50 RSI. It's been above a 47 RSI since January 8th. So I'm saying it doesn't belong in your portfolio at all? No, I'm saying it very likely has a crappy 2-ish weeks here tactically because people are going to be getting bulled up across different parts of the market. It could be China, it could be gold miners, but it's not going to be this area of oil, I don't believe. Look for this to go lower. I would think it's going to have a resting point right here around the 21-day moving average, around 134, literally where it is right here. And on the downside, I would not be shocked to see this get to 123 over time in the next 2 weeks. I think makes sense. Don't forget, 121 is the 50-day moving average, typically where you'd see a decent winner rest to. So we'll see. That makes sense in my mind, but markets don't have to make sense. They got to make you dollars. So overall, oil, great flows. There's definitely worse places you can be in the market. What a great breakout once USO got above, honestly, the week of the war, once we got above $82. The chart looks good. I just wouldn't touch it in the next 2 weeks. Trades, again, very headline risk sensitive. You could sell the 140 calls. Be careful. These are spicy trades. They're still holding about 50 RSI. You could also potentially sell, the 115 puts. I'd have to look at this more. Honestly, I just don't. To me, it's a no touch. I'm getting bulled up, allocating where things deserve dollars instead of trying to pick up pennies getting steamrolled. You got to be careful with that. More all-time highs, 7,300 S&Ps. All right, but that's oil down 7% today, and then of course. Volatility, they're hammering it today. Not massively, but this is the third loser on the board. So if you're in energy, oil today, volatility, yikes. So if you own puts, on like beta things, or obviously calls on energy, oil, there's not the place to be. Here is volatility, and look at this. We got all-time highs in SPY, right? Soon we'll be getting new all-time lows in VXX. They're coming, baby, it seems. So the market would get a lot more confidence if the war was surely over and we get into that tranquility phase that we were on January 9th when VXX printed under $26. Here we are at $28. VXX is a big loser. Today is actually your third biggest loser of the past week, although it's only down 3% in the past week. In terms of volatility here, maybe small creep ups just in terms of the doubt that the war may not be ending. So I see it kind of holding around the $28 level, to be frank, and see where it goes. I do think it withers over the next couple of weeks. If you're saying, S&P, that's when it's curious. But just looking at this, always difficult to chart. VXX, a non-time series chart, but the scary phase was when we were above a 200-day moving average. And look at where the actual fear was. These are taps of it, okay? So this is like your bench player gets a 40-point game. It happened one time, okay, but it's not regular. This is your Shea Gilgeous-Alexander actually crushing it. Whoa, this is a new regime. And this is March 26th to April 6th. So you have the bear market of SPY, which was actually about 3 weeks. The fear, I'm imagining regional banks going down, that type of actual fear was like a week and a half. Okay. That's when your aunt was probably buying puts saying, do I still contribute to my kids 529? And that was it. And now what are we saying? We might be looking at 52-week lows of VXX very soon. So I look at this more so for charting. I'm not going to get trade ideas out of this. But right now, yeah, man, we got a 38 RSI on VXX. It hasn't been above 50 since, of course, April 7th when everything changed with that ceasefire. Top 3 gainers the past 5 days. Get a seat because this is absolutely crazy. I was going to put in DRAM, that, the AI, the memory rather, ETF. I know it's everyone's favorite. I was actually close to purchasing it myself, but instead I went more into South Korea, just more tracking, more data on it. And I love the move in South Korea, although DRAM, I'm not going to tease you if you're long that thing. That thing's an absolute horse. It just squints, just barely beat out EWY. I went with more EWY here for volume. EWY up 4% today, up 18% over the past 5 days. I've been in it the whole way. I was just waiting for the triggers to buy more, and that's how you make and ideally hold money. 18% over the past 5 days, more than 3% a day. Obviously, you can tell that trend is garnering and gaining strength here. Look at this candle here today. VWAP is 180.77. It's at it right here, right now. The high was 185 essentially. So they got really bulled up outside the upper Bollinger Band, 76 RSI. This is absolutely insane. It reminds me of the semis chart, just up and to the right. Obviously, more red days. It's been more balanced than the semis, but this should have a move to 152, a whopping $30 away. It's possible that would hurt. That would suck immensely. Down to like 155 level actually, but it would make sense. It would be healthy. I'm not so sure it's going to happen right now. If you're trying to play this and just buy the breakout, Anyang, South Korea, Anyang, all of you, I got to go over there and visit someday. But right here, the ATR 674, you call it 2X here. So it's about $13. You can get in right here, right now to South Korea. Should it decline $13 to 167, get out because it's very likely going to about 153. Save yourself that difference and then re-enter right there. And then otherwise enjoy the gains. The candle today is a little bit, I don't want to say scary, but I do want to see it hold 181 going into the end of the day, or it could be possibly a short-term failure, but I don't think so. Just with the confirmation of 77 RSI, that's the example of Taylor Swift playing your garage again. There's a long line to buy Samsung and Hynix here, which is 40% of this index. And I'm glad we have this wonderful ETF to capture. New all-time highs for that baby. Absolutely crazy. The best ETF in all the land, and I'm saying here, there, everywhere, in the past 5 days. South Korea, very glad to be in it. Told you guys about it. I hope you listen. Number 2 best trade, and we're in this, the sister of SMH. This is the SOXX, second best trade in the board. Quite a bit away, but still a monster 5 days, 11% or 2% a day. Today doing 2X that trend. Similar looking chart to South Korea. Crazy RSI. More green days in a row in the past 5 weeks versus South Korea. Yet South Korea, because it's like crack and folks are just injecting into their veins essentially, is just straight up in terms of percent, 18%. There's also a liquidity thing where it's really hard to get. This is SOXX and everyone has semis basically, including your grandmother. This right here, we looked at SMH. What can you say? I mean, how can you solve a problem like Maria? Should it decline to about 435? Yeah, that would be healthy because the thing's just going straight up to the right and, trees don't go to the sky. And also understand that earnings are, I don't want to say out of the way, but you had your major day last week with Meta, Google, Alphabet, Amazon, Apple, et cetera, et cetera. So Microsoft, so a lot of the bigs are out of the way. Uber, I believe, was yesterday. So for me, top target for this is like 460, 475. This is absolutely nosebleed territory. I am long. This is a massive 15 ATR. It's so big. I understand if you don't want to do 2 ATRs. So if you wanted to do, 22, 23. So you could just do, in the middle, let's say $20. You can get in right here at 501. If it gets to 480, get out because it's very possibly going to 435. These are big numbers we're talking about. Okay. And that's the move with SMH. These are moving so much, I don't really feel the need to buy the calls. If you want, I guess the trade du jour, you could buy the August targets that we're talking about essentially. But be careful. These are going to cost so much. They're up 3 weeks in a row. I'd rather buy the stock and do the ATR rules like I was telling you. All right. And then next one, this is interesting. When you have oil down 11% this past 5 days, what's going to be the exact winner, beneficiary of that? Airlines, cruise liners as well. Cruise liners don't really have their own ETF. The Jets does, though. Look at these ugly gravestone dojis. Boom, rejection on the 17th. I believe that was the ceasefire day. Look at this ugly one today because obviously the oil move today. Look at this. They took this to 28.10 high of day on the Jets. And then the VWAP is 27.36. It's under that by 1%, but still up 4% on the day. And this is your third best ETF of the past week. They loved South Korea, they loved semiconductors, and they loved jets. Okay, understand that. And these are all, AI and war focused. Okay, these guys hate obviously having to pay $130 a barrel for crude oil. All that being said, as I said, energy is going to be a bad place to be for the next 2 weeks. This will be a good spot to be in, I believe, for the next 2 weeks. The resistance here is scary in terms of, $29, 10% away. But I do think the Jets has a tactical good 2 weeks. I think I will get derivatives play for this one. I do believe this is going to head to about, whoops, let me move that box there. I think this is going to try to get to this 28 to 28 half level and then no more than that. So I'm not asking it to do Herculean type lifting here. So, I mean, an idea could be expensive as well, but I would possibly look at the August 28 half, see what's listed calls, and then sell the May like 29s against it. That looks like a possibly a good one here in Jets, that for an options play. Also, alternatively, it's a little bit risky, but you could look into selling like the 26 puts in Jets. So some income plays there, or just straight debit spread ideas. Okay, so those are the three crushers this week. Let's wrap that. Let's keep moving. Top three losers. If I already had the chart, I'm not going to repeat it too much. Worst loser the past 5 days is one of the reasons why we got stopped out. USO down 11% over the past 5 days, or a little bit more than 2% a day. Down today 7%. Although it's trying to put a hammer in here with that low at 127. We already talked about it, so not going to kill a dead horse. Kick a dead horse on this, but down 11% in the past 5 days. Yikes for oil. Number two, of course, affiliated and much correlated to oil and gas exploration space. The second worst ETF of the past 5 days is XOP, down 4%. Okay, and this is this candle here. It's basically looks exactly the same as the XLE and energy or USO. So for this, also don't like it. Next 2 weeks looks like it's going to be visiting first stop one. Well, it already hit. Is it at the low of day right here, right now? It's $1 off of the low of day. They don't like it at VWAP. They sold it under that. Yeah, it looks ugly today. This looks like over the next 2 weeks, they want to send this to about 160. Would not be shocking to me. So again, you can either buy puts or you can sell those calls. I just don't think energy is going to be the place to be unless you have a geopolitical fallout and Iran says, no, you know what, we're not interested. Bomb us. Let's see what if I care kind of a thing. There was more escalating, but that doesn't seem like the environment we're in. That is XOP. And the number 3 biggest loser was VXX, down 3.33%. So again, past 5 days, if you were in oil, like any part of it, the oil energy complex, XOP, and volatility, those were the worst trades. All right, top 3 trades of the past 5 days, all together now. If you were long South Korea, EWI, long SOXX, SOXX, I was long SMH, and short USO, I was long USO, so I was 2 out of 3. Congratulations, you are slaying this market. I can't do a video Friday. I hope to be back tomorrow because I don't want to do just one this week. So let's try and do one tomorrow, see how this day wraps up, and we'll speak with you then. Peace.